Is absolutely influential beyond words, Scott. When you look at just yesterday alone, I mean, we talked about it at the top of the show yesterday when we were talking about looking at the market, watching the NASDAQ as it was falling, and how many different components of the NASDAQ itself feed or come from some sort of arms and tentacles of Apple. And I think, I think what we're seeing in Apple right now is we're seeing that usual, when we've seen this time and time again in the past, where we've seen a little bit of angst, a little bit of folks getting a little nervous and pressing on the stock. And I think we're seeing that press. I continue to stare at it. I mean, literally I can't wait for the opportunity. I have not seen the options market tell me that maybe now is the time, Scott. So I'm waiting. I'm still holding because I actually believe in, hey, the revenues were unbelievable from the iPhone, right? But everybody's focus is on, well, but they did miss on that top line, the unit growth. You know what? I think Apple actually makes a lot of sense. They're going off of units themselves, and they're multiplying that by the average selling price, which did go up $50. So you look at those numbers, they were outstanding, but everybody looks at the unit numbers and says, you know what, it's slowing down. Of course it's slowing down. That's something that everybody expected. That's why they've got services. That's why they've got wearables. And if you look at services out 3, 4, 5 years, like Katie Huberty pointed out the other day, she expects that to move from a $40 billion asset to a $101 billion asset. So I see the growth in the right places. And oh, by the way, that's where margins are as well, Scott. So I'm not as negative as on the market in terms of Apple, but I'm waiting for the opportunity because I'm not sure they're done selling yet.
Well, you're suggesting, though, that the stock is going lower in your mind.
I'm not suggesting anything of the sort. I'm suggesting that I am looking for the options to give me that, hey, you know what? It's time to turn. We've seen it before, Scott. I remember not too many years ago looking at everybody on the desk for the most part said, I don't even want to touch Apple. It was trading around 100. It gets down to something like 85. But the options markets always seem to move first because we see these massive buyers come in looking for that upside move. We haven't seen that yet in Apple. We've seen a little bit today, but not enough to get me back into the name. So I'm not saying it's going lower. I'm just waiting to see the option players come back in.
I think, Scott,
yeah.
what
Stephanie
Pete's,
Link, what do you?
I was going to say, I think what Pete's also talking about is, we're looking for washouts. We talk about that all the time. You see a washout. Well, that's kind of an easy, but it's also tough to pull the trigger when you see those. Lumentum, you saw it yesterday. That's a stock that trades 1.7 million shares a day. It traded 18 million shares yesterday. Same thing with Cruise. By the way, Lumentum's up 6% today. Cruise is up 8% today. In other words, I think you saw washouts in some of those suppliers. Perhaps not all of them, to Pete's point, but I think a lot of these, that's the kind of move you're looking for. If Apple had that big turnover yesterday, Scott, and or if we saw a massive amount of speculation coming in, either with calls or people just, throwing up their hands and saying, I got to get these puts, that might be the signal that Pete's waiting for.
Yeah. Steph, is Apple going lower?
Well, I mean, that's a million-dollar question. I think the valuation is very supportive here at 14.4 times forward estimates. So, Scott, the problem with Apple headed into the print, into the quarter, it held up so well, remarkably well, relative to the rest of technology. And so it was not only there were issues with the iPhone and there were issues with gross margins, but it had held up so well. People were almost hiding in the name. By the way, it kind of reminds me of Cisco into their print tomorrow, which I've actually been trimming for that very same reason. I think these are very good long-term stories, but it's all about positioning. I am disappointed in terms of the iPhone sales, but I do think ASPs will be stronger. I think gross margins have a shot to get to go higher over time, especially as currency becomes less of a headwind. And again, memory prices really will help them. And again, to Pete's point, in terms of other products, in terms of services and wearables, and that being the growth story, I think the reason they pulled back on the guidance on iPhones and units really was because they want to be more known as a holistic company. And if I'm thinking about this company like a consumer products company, where the staples are trading at 20 to 23 times forward, this is trading at 14 times. I think you just let the dust settle, let them buy back a boatload of stock, and I think it's going to be fine in the long run.